Thank you. I'm John. I work here at the Blockchain Center. And who's new to the center? I see a few people going there. Great, excellent. I will direct some pointers to you. So the Blockchain Center opened in November last year, physically here, but we've been open since 2014, working towards under 3 pillars. We've got education, co-working, and community. But before that, I just skipped a couple of slides. The talk tonight and all the information that's here are not financial or legal advice, so please take due diligence and contact those that are the experts. We can put you in contact with them, so talk to us after the talk, but for now, yeah, non-financial, non-legal. And notice photography, I'm sure you've seen quite a few cameras here. I think we haven't seen this many cameras at the center for a while, but there is a Facebook Live that's happening. So if you do not want to be part of that, please stay away from the cameras. As I said, education, co-working, community. We offer introductory classes, workshops, and a bit more. We've got Australia's first blockchain developers course that is now, but if you want to be part of the next cohort that's happening, please let us know. We've also got introduction to cryptocurrency, fundraising through ICO that's happening. We also have our blockchain 101 class. So this is what's coming up. The 18th of July, which is tonight, Talk and Trade that's sponsored by CastleCoin. 19th of July is fundraising through ICO. So if you are a startup looking at ICOs or looking to work in an ICO or having an ICO, please go to that. It's delivered by one of our educators, Susan Dart, which is here tonight. Can't see her, but hello, Susan. 30th of July, I just put this up today. We're doing a couple of talks, something different. It's called Beyond Blockchain, Emerging Technology Evolution. So we're going to be talking about holochain and quantum technology. So if you are interested in seeing the latest development or what it is going to be the next part of this evolution, please come to. It's $20 with beer and pizza, but if you're a VIP community member, it's free. Who's a VIP community member here? Great. You guys getting beer and pizza for free. Plus know more about the emerging technology that's happening. And the 3rd of August, Women in Blockchain. So we've got a special guest talking to that. There's a slide. Co-working hot desk. This is the co-working facility that you guys are sitting on. It's all mobile desk. If you want to know more, please go to our Eventbrite and Meetup page, and you can be part of our community of all those lovely people there in the photo. But, as I was saying before and was nicely reminded about VIP community member, if you do want to sign up, it's $50. $50 goes towards your next workshop. Anyway, it works for itself, plus you get free to events such as the Beyond Blockchain event, plus other VIP and pre-sales and exclusive tickets that we may have here at this center. Block Engine is our startup incubator program. If you are looking to be a startup working on blockchain technology, please email info@blockchaincenter.com.au. And for those who are at home, if you are watching this, please remember that. We are a not-for-profit. Without our partners and our sponsors, we wouldn't be here. So thank you to Blockchain Global Digital X IBM. And there is another sponsor that's coming on board soon, and we will have a massive event to celebrate that. But I think a lot of you know who they are already, but we'll let you know when that does happen. Other industry partners, CoinStop, NEM, and our association, ADCA, Blockchain Australia, and FinTech Australia. If you want to know more and see what's been going on, want to see previous videos that we have here, please follow us on social media. Blockchain Center for Instagram and Twitter is Blockchain CTR, but also use that as a hashtag Blockchain CTR. And tonight's sponsor is CastleCoin. They are providing a presentation, but also importantly, they're providing beers, drinks, and pizzas later on. So let's give them a round of applause. Fantabulous. All right, I'm just going to go at the back here. Slido. If you guys want any question answered, we will be working towards Slido. But anybody that's new here who has any burning questions, you can also raise your hands. Our facilitator or moderator will be talking to you. We'll have some microphones going around. But TT18JUL, Talk and Trade, 18th of July. Makes sense. So please add your question there. But for now, thank you for listening to me, and I will hand off to your moderator for this evening, Anup Pinchetti.
Good night, everyone. I see a lot of new faces. Who hasn't been here before? 1, 2, 3, 4, 5. Okay, a couple of new faces. Excellent. So you might not know how to use Slido. So you've got a chance to download an app. Otherwise, we usually kind of start with questions from new people in the space. So if you dare, feel free to just shout out something you've been curious about and you've been wanting to discuss from some of the new people. Yes? No?
You might want to go there. The internet's down a bit.
Oh, the internet's down a bit. All right.
So you might want to go to an audience question for now.
An audience question for now. So, we've obviously had a really big pump in the price over the last 24 hours. So anybody think this is when Bitcoin goes to the moon and never turns back? So,
more FOMO, please.
More FOMO. More FOMO. This is, it's never going to stop. No, look, I've heard just as many people calling it, this is the start of the next big rise, as I've heard it calling it a dead cat bounce. So, I personally, I'm thinking the latter is probably a little bit more likely. But it's a welcome breath of fresh air in the market anyway. Are we going on Slido? Nope, all good. So, any other sort of questions that people have? I know I saw an article this morning that was stating that the UK was set to become the global center for crypto. They're well positioned as there you go. Is it true? They're well positioned as a financial hub of the world at the moment, and they've got some people pouring a lot of money into it. But then again, right? What do you need to be a world the center for crypto? It's not the physical infrastructure so much. Who thinks that the UK is in a good position to be the global capital of crypto?
Well, it's a bit ironic, isn't it? Like to have a center for something that's decentralized.
Yes. Taking the D out of decentralized. So, the question then is, what does it take? I think definitely having favorable regulations for ICOs seems to be a massive factor, which is, I have heard of a number of projects going to Gibraltar, which is basically putting yourself in UK anyway. Malta's another popular one, and people seem to be avoiding China, but everybody's going after that China money.
What does this mean?
Which one, sorry?
The UK. Like, what is sparked this article? What are they talking about?
Mostly that there were large financial players putting significant money into blockchain projects. That was it. From the UK. Now, I regularly see lists of, this is how many billions have been committed by this large firm, and therefore the world is changing. Right. In terms of a global center, I actually think it will have more to do with regulatory jurisdictions, because of course it's where crypto is located can be difficult to pin down in a lot of cases. So yes. All right, no one's voted on any of these. The top one here, is blockchain making the world more or less fair? Oh, we've got a vote. If high demand and limited supply pushes up the price of BTC, if we factor the new supply of other crypto and not just the 21 million just the 21 million coins, how can we have BTC equal to 50K? We don't have BTC equal to 50K. But if high demand and limited supply pushes up the price of coin, we factor a new supply of other crypto and not just the 21 million coins. So there's, okay, it's like a multiple part question that's twisting my brain. It's a bit of a trick question.
Saying if 21 million is not the supply of Bitcoin,
Yeah.
if you factor in the rest of the market.
Yeah. Now the rest of the market isn't bitcoins. For starters, we do have the fact that each of the individual currencies may have limited issuance. That's hard coded. However, on the aggregate, the fact that anyone can spin up a new supply of tokens in any number means that potentially the market overall doesn't really have a limit or a cap at all. And the value then really comes down to the marketing and the convincing people that this is the coin that is useful and therefore has value.
There's a big difference between Bitcoin and like some ICO that's just launched though. That is not the same thing.
Yeah, like a year-long ICO.
For instance. Yeah, so, and that's true. Some ICOs have a far better justification of the values than others. Some coins are launched without an ICO, but it seems like a lot of these projects are, looking to raise funding that hopefully they will put some towards the development of functionality in terms of a project. So yes, look, on the whole, over the market, there may be no limit to the supply. So we might be talking about cryptos in general not having a supply limitation, even though individual projects do.
It's like asking, what's the price of gold going to do if we discover more silver?
Yeah, it is. It doesn't really do anything to justify or counteract the a 50K price of BTC, which is another completely arbitrary number anyway. Okay. Is blockchain making the world more or less fair? I'd like to see a show of hands. Who thinks it's making the world more fair? All right. Now, who thinks blockchain is making the world less fair? Okay. And who has no idea? Okay, so everybody else won't put their hands up. So I'll single you out as the one person who dared to put up their hand saying it's making the world less fair.
Both.
It's both? Yeah.
Because people that can take advantage of their position, like the whales in the market,
Mm-hmm.
they can work outside regulations that keep people safe from predatory behaviour. So it certainly can be unfair in that sense. That's a good point.
Absolutely. Look, I think in terms of the ICO space, and look, at the moment, the blockchain ecosystem is very elitist. You have some very highly educated people that are spinning up all the ICOs that are happening, and they are appealing to very wealthy investors to get lots of money for projects. That's the bulk of what's happening at the moment.
It's a premature question because it'll only make the world more fair if it can fulfil its promise of getting rid of the central banks. And that was one of the obviously what Satoshi Nakamoto had in view was a really fair financial system. But it doesn't make it more or less fair now when it's just, as you say, an elitist addition to a broken system. So it doesn't make it any more or less at the moment.
Well, yep.
Currency is only one form of blockchain use, though. You have decentralized applications that may eradicate and make businesses cheaper without getting rid of a central bank.
Yes, but there's not any really good use cases for them.
Not yet.
That we've seen so
Well, it's
far.
only like 3 seconds old.
It's a premature question.
It is very early, but of course we need to be watching this because I think there is evidence for actually both sides, right? I think on the one hand, for instance, I actually don't think we're going to get rid of banks anytime soon. What happened there? I don't think we're going to get rid of banks anytime soon. However, we are already seeing that there are banks around the world suddenly offering near zero fees on international remittances and near instant currency transfers because there's competition now.
That is so awesome.
It's massive, right? So I think even if we're not getting rid of banks ever, but in 15 years, they all have to offer 0% interest rate mortgages because why would you pay anything higher? And they can offer credit to people who have other sources of credit on community blockchains because they're competing with, different ideologies. Then it doesn't matter, right? And I do think there will always be larger and smaller fish in every pond because that's simply the way that nature works, right? Not every plant in a forest is a 30-meter tall tree. But the fact of the matter is that the larger ones are supporting a huge array of functions in that ecosystem. And I know I, for one, would quite happily pay a $5,000 fee to have an interest-free mortgage, but one that was managed by someone else who wasn't going to lose my keys or send things to the wrong address or allow me to recover my password if I forgot it or manage to make sure that all the legals were in order and et cetera, et cetera, et cetera, et cetera. Right? These are services that are not that user-friendly yet in the blockchain space. And service providers can add a lot of value there. Now, my memory is not great in terms of the other questions that were up on the board. So I can talk about fair and unfair, or we can talk about fair and unfair for a little while. I think what we are seeing is that blockchain at the moment is a hyperization, to make up a new word. It's basically putting some of the dynamics of our current system on steroids and speeding up a lot of cycles, but not necessarily making them more fair in a lot of cases yet. But I think we are seeing a lot of competition opening up with the banks, and that is definitely better overall for the end users of financial services. And I think that can only be a good thing. Okay, some other questions. Did somebody put something up there? Yep. Would it be feasible for Power Ledger to be integrated into mainstream society in the near future? Yes. In the near future.
So it'd have to integrate with all of the electricity retailers throughout the country. And since it's only in, since it was founded in Western Australia, right? Oh yeah.
Oh. Cool. Well, you might as well start with that. What's Power Ledger?
Power Ledger is like an electricity solar token, I guess is the way to say it. It's where you can exchange and buy electricity by the kilowatt with the token. That's the idea behind it, right? Yep. It was founded by the Mayor of Perth, I believe. And so the way that the industry is with electricity is that you've got all the retailers who are buying it off the distributors and then they're selling it to the customers. And Western Australia has its own electricity market that is different from the rest of the country. So if it was being tested there, which I think it is, then it's isolated. It's not going to work with the rest of the country yet. You need the whole country to be blanketed with that. And to convince all the retailers, we have 16, I think, in Victoria alone, it's going to take a lot of time.
Yeah. And the rest of Australia, there's a reason that the vast majority of community solar projects are behind the meter projects, because of course the price of distribution in Australia is legislated to be high and ever increasing. So because the distributors get to make a guaranteed return on their infrastructure, it just remains to be seen if Power Ledger can offer viable returns on projects in other legal jurisdictions, so in the other states. So that'll take a while.
It'll be like once the Tesla batteries become affordable. Yeah, thanks.
So once the Tesla batteries become affordable, where like basically everybody can afford solar panels on their roofs and have the Tesla batteries installed, then it's going to be viable. But for now, no. Still, solar is getting affordable, but it's still not at that point where like the batteries are like $30,000.
Yeah, Power Ledger has at least 20 projects all over the world, including Melbourne, including United States, including Indonesia. They're all over the world, and they're filling a gap that doesn't really compete with what you just said about Tesla. They're dealing with apartments, so people in apartments, you don't have the option of determining how you get power and all that. So Power Ledger has a solution for rental apartments where you can share the energy, buy and sell it from each other. So that's a space that no one else can deal with right now. So they're very active and they've got tremendous support worldwide.
Yep. And Solara is looking to play in that same space as well. Which banks are friendly or unfriendly to crypto trading? Does anyone know who BTC Markets or Independent Reserve are banking with? I don't actually know who BTC Markets use. Anybody in this room happen to know?
They've changed banks a lot.
Yeah, they do.
They've changed banks a lot. That sounds likely. Look, I think in this space the banks denying bank account services is I think it's a temporary problem, and I think in
I don't think it's temporary. I think it's going to be a continual problem, and it potentially could get worse when they realise the competition always.
I'll add to that.
Bishop, can we pass it? Yeah.
I can tell you just from first-hand experience at Caleb and Brown which banks are not friendly, and that's Commonwealth Bank and ANZ Bank are both unfriendly towards crypto. Westpac as well then. But interestingly enough, did anyone see the LTC Foundation has a 10% stake in a German bank now? So that has nothing to do with Australia, but it's a very interesting move and could be a really good gateway forward to being a crypto-friendly bank that can be an onboard and offboard ramp in the future to come. So that's pretty exciting.
I read an article recently, I think it was Venezuela, where there'd been several lawsuits against banks and by banks against exchanges, and the first appeal in the High Court had actually found that the bank had acted illegally in denying banking services on the grounds of accusing of money laundering just by the virtue of being a crypto exchange. So that's an interesting precedent in one country. We'll see whether that actually, is something that we see more often in more places, and what happens in that space in Australia over time. I think at a certain point that it becomes like shooting yourself in the foot if you're, cutting off the nose despite the face kind of situation.
Sorry, just further to that.
Yeah.
A month ago I mentioned I'd get a phone call from ANZ. There was this debate whether it was a scam or not. Well, then I got a letter as well. So they've documented all the transactions I've had that have been they think involve Bitcoin or whatever. I'm just wondering if there's anyone else, I've heard other people, has anyone else had letters or phone calls from banks? Mine was ANZ. No? Well, they're very aware. If you like, so for example, I used to buy and sell stuff on Australian CryptoCurrency exchange when they had no fees, so you could just like buy and sell within the one market, and then I'd send it to ANZ, and they had all records of all those. So there's 5,000, 10,000. They had the dates, and they wanted to know what the ABN number was that I was dealing with. What was I doing? Was it a job outside my normal job? Whatever.
Thanks, banks, mate.
Yeah. Tell them nothing to
Well, not what they said is, I owe them 40,000 on that account, so they can shut it if they want.
Yep, question from the back.
I think more a clarification from a bank standpoint. Through AML and other reasons. Through AML and other reasons, when transactions around the $5,000 plus go through the system, I do not know that it is necessarily to do with the fact that you're doing Bitcoin transactions. That correct, and they would have seen from their records what it is. So it is a combination of AML and KYC, and they have to ask those questions, otherwise you get into trouble with APRA like Combank did. Okay, so I think it's also part of the overall anti-money laundering, funding terror, all these kinds of strange things that the banks have to cope with, unfortunately.
They don't have to answer below 10,000, but they love to do it anyway.
Absolutely spot on. So if they see a pattern, they will have to do it.
They don't have to, no. Under
They will do it.
They don't have to.
Correct.
They will do it because they can't cooperate with the government hard enough.
You're so right. Again, I'm not trying to defend the banks, it's a bad thing, but if you were to front up in terms of this banking commission inquiry and get hit over the head every time, you would be very, 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 very careful. Unless you're totally a masochistic person.
Excellent. Coinbase custody. So I believe Coinbase are are partnering with one other company to provide custodial services for cryptocurrencies. The phrase "not your key, not your private keys, not your bitcoins" comes to mind. But I certainly think that is a big step that's needed for institutional investors to be able to enter the space. Whether people want institutional investment to enter the space or not might be another question, but I think it's definitely coming, and I think it's definitely a necessary step for the crypto wave to wash over the entire world, as most people in this room want.
I'm trying to summarize an article that I haven't read. So, but based on this, in the last sort of 48 hours, Coinbase have also acquired 3 companies. One, I don't know which country. I'm assuming America has a stockbroking exchange license. One that has an investment advice license, whatever that is. So they're making inroads into trying to be serious and real and all of that stuff.
It's related to security tokens as well.
Yeah.
Okay. Yeah.
So and there's a whole other discussion I've been having with some people recently about whether security token issuances will be a thing or whether they will not. And I certainly expect that they will be a thing. I think they're a superior asset class to shares with the 24/7 trading, even though you might legally be restricted to trading on the same markets. Anyway, you have an addition?
Yeah, so it's not just that, it's that if the SEC determines that some coins are not utility tokens and are security tokens, then Coinbase would still be okay and not be shut down. Yeah.
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 Exactly. My understanding is that none of the exchanges in Australia currently have AFSL licenses. So I suspect that will be changing over time, but I don't know. Okay, who's your crypto daddy? Yes. Is the bear market over? Show of hands to get room sentiment. Are people pumped on the last 24-hour movements? Who's pumped? Okay, there's a couple of people pumped. The market's definitely pumped. So
The chart in this room, just that this room is full today, I think is a good sign.
I think very much so. There's probably 30% more people here than there were last week. So, yeah, that's that's a massive improvement. It's also a little bit warmer outside. That also helps. All right.
Do you want me to quickly talk about EOS for like 2 minutes?
Yes, if you're up for that. I'm sure we'd love to talk about EOS. So it's
there you go.
Da, 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 da. So here we go. How's the EOS blockchain performing? So you want to? I mean, look, as a little bit of a recap, just to set you up. EOS, incredible project that's promising an even more incredible future. Raised $4 billion. A lot of people have put a lot of faith in it. It's launched, and there's been a lot of controversy because they went down for 5 hours and started blacklisting a lot of accounts, which of course has caused a lot of consternation that there is centralization of control and power, and that there are bugs, and that the actual people in charge of the project have simply handed over the responsibility of fixing the bugs to the community in general. So there's been a lot of very angry Twitter feeds, and we've all been waiting for Shannon to come back and shed some light on why this is all happening.
All right, well, you're going to be disappointed. But I'm going to try and keep it as simple as possible. Whilst I've been away, I've absolutely done zero research on blockchain whatsoever, including EOS, because it was my plan, and I stuck to it. But I'll explain to you guys a little bit about what I know as a simple recap. If anyone was here at the last EOS 101 we did before I went away, then you would remember that the last thing I said before I left is when this chain launches, it's going to be an absolute nightmare for at least 2 months. That has not changed. That is why I shut down my computer, did not look at my portfolio, and didn't really care about anything until August. Because everything that's new always has teething problems, especially when it's such a huge experiment that's launched by the community. And a lot of people give Block One a lot of shit for doing this and for not launching it themselves, but you have to look at the bigger picture. If we are actually going to launch something that is actually going to have mainstream effect and actually disrupt things on a scale that it needs to, like this project, then you don't want any sort of loophole where it's putting serious pressure on the way, the status quo, and then they can come in and shut it down because it was launched, let's say, by Block One, or there's any sort of weak point in it. So this is a massive experiment. They've literally left it up to the community to raise. They're doing governance. They're doing all sorts of things that blockchains don't currently do at the moment. And whether it works or not, nobody knows. But this is the point of trying to move forward to actually bridging this into the new world. Like, there's got to be a bridge that's easier to use, that has account recovery, that can stop people from just being hacked and ripped off. And this is where the governance issues have come in, because what's happened is they had an arbitration system. It wasn't really mature, I don't think. I think it was super rushed. And therefore, there were accounts that got hacked. They put forward, a motion to stop this. The block producers, obviously being all very new, I think acted hastily. They blocked all these accounts, which had been hacked. But it caused a lot of controversy because people think that it didn't really go through the proper arbitration process, and it was all way too rushed. And I agree. I don't actually think it was a good move at all. But it's all an experiment, and it's all new, and now they're trying to work out, I guess, the way forward. Are they going to get rid of the governments? Are they going to keep the governments? Nobody knows. What I would say, though, is look at the things that are being put in place at the moment, and what's happened in the last couple of days. I don't know if you guys have read it, but there's been some pretty big moves. So Peter Thiel, I don't know how to pronounce that properly, but for those of you who don't know who that is, he was one of the co-founders of PayPal, and he was the first VC to invest in Facebook. So he bought 10% of Facebook in 2004 for about $500K, and then later sold it for like $1 billion or something. His company is invested in Airbnb, a whole bunch of other stuff. You'd have to look it up, but he's obviously very good at picking what he thinks are going to be the future in the tech world. and he just led the investing round into Block 1 that just finished. The other massive player in that investing round was Bitmain. And whether, they're a $12 billion mining company, obviously. They specialize in proof of work, but they've invested into this, and their statement quoting that the reason they've invested in it is because they see this as being the first thing that can actually scale to size to go mainstream. Now, whether you think that's a good thing or a bad thing, there are some very, very serious players that are moving forward to supporting Block 1 as a company for building decentralized apps, and they're doing some serious recruiting on stuff. And again, whether it's good or bad, they've just taken on the ex-COO of Commonwealth Bank to head up all their finances. Probably not the thing that we want to hear as libertarians, but the point is they're making some very, 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 very serious moves to actually take this to the next level and really actually start building decentralized ecosystems that are actually going to be operational businesses that are actually going to disrupt things. So yeah, there's been some teething issues in the first couple of weeks of launching it, especially without anyone driving the wheel, it being completely up to the community to do. But as I said before it launched, that is completely expected. It would be crazy if that did not happen. So as far as I'm concerned, it does not really there's going to be probably a lot more problems as they work it out. But I think it's actually going a good path. And yeah. Love it. But yeah, anyway, that's my take on it. I haven't done enough research. I've been ignoring it for the next couple of months because this is what I expected to happen. So yeah, that's my recap.
Thanks.
And if you have any questions, ask
Harrison.
He's over there. So yeah, certainly a project of that size and with that amount of funding is no guarantee of success, and you can expect some teething problems. Keep reading, keep watching, and we'll see what it takes to scale projects, because of course we've got the oldest projects which have been the most thoroughly tested, right? The main argument for Bitcoin is it's been around the longest and everybody's tried to have a crack at it and no one's broken it yet. However, you can't say the same for some of the smaller, newer chains. Hand Cash Wallet. I'm absolutely not familiar with Hand Cash Wallet. Harrison, you want to enlighten us? Yeah, there's a microphone right there. Magic.
There's always a microphone.
Okay, so
Boom.
Yeah, so the Handcash wallet is one of the cutting-edge wallets made on Bitcoin Cash exclusively. And what it does, it's one of the first wallets that actually has NFC peer-to-peer transactions built into a mobile wallet. So that means you can just tap phones together and actually send cryptocurrency without having to scan the barcode. So because it's on Bitcoin Cash, the fees are really low. It goes through on a zero-cost transaction within literally seconds. And it's pretty much the cutting edge in terms of user-friendly wallets. It's just been released recently. It's come out in beta.
Awesome.
Maybe.
Awesome.
If you guys want to have a look and see what they've done with Handcash Wallet, it's, in my opinion, one of the best wallets that's been made. It's one of the best ways that we can compete with existing payment technologies where you just tap and go to pay for a coffee. Using this wallet, the retailer could have perhaps like an iPad or something where you just tap the back of the iPad and it works just like a tap and go terminal, but with on-chain cryptocurrency that's obviously as decentralized as anything else.
I want to see gesture support.
It doesn't have gesture support, but what it does have is cash handle support. So instead of having to type out the entire Bitcoin Cash address or scan the code, you can actually make your own basically username. So instead of like a Twitter handle where you have @HasMcLean, for example, you have $ or cash tag HasMcLean, and then anyone can send Bitcoin Cash to that cash tag without having to either tap your phone in person or know your address. So it provides sort of a layer of simplicity for new users to just hand over a username instead of saying my address is 1763 and then keep going.
Excellent. Okay.
Is that a point of weakness, though?
It's not a point of weakness in the sense that it has any cryptographic flaws, but it's a small point of centralization because at this time the Handcash tags are resolved by the wallet on central servers, but they've been making plans to move those to on-chain transactions so that there's a decentralized way of pointing to the address.
Currently it's only for Android, right?
That's correct.
When for iPhone?
I'm not 100% sure. I'll have to ask the dev. Dev's a great guy.
Excellent. I learn something every time I'm here. That's I like it. Thanks. Won't be on Lightning for a while, but.
Lightning has been taken over. 49% of the liquidity in Lightning is in one Lightning node made by a guy who runs a domain called, wait for it, shitcoin.com. I wonder what he might do when he works out that a lot of Lightning Network payments tend to fail, and in order to use Lightning you first have to own Bitcoin and then install a full node and then sync it with the Lightning wallet and then open a payment channel, wait for the confirmations, and then it's actually, you have to send an invoice to do a Lightning network payment, so there's a lot of extra steps.
Sounds trustworthy and simple.
Oh, yeah.
All right. The Augur mainnet launch. So.
Do we want to talk about that one too?
Go for it. That's,
okay.
I heard they launched, but...
Oh, they did, yeah. So Augur is a project that is on Ethereum, one of my favorite decentralized applications that I think has a real use case and has a token behind it that is able to provide value to that ecosystem in the terms of how it operates. Unlike a lot of ERC20 tokens, you actually use the token in this mechanism to vote for the outcome of prediction markets. So it's a way to put an economic incentive on the people who create prediction markets to actually resolve them correctly. I'll bring that back into some more simple terms. For those of you who've never heard of Augur before, what it does is it enables people to create prediction markets on Ethereum, which is essentially like saying it's a smart contract that lets people bet on the outcome of an event. In a much more complicated sense, you can create assets to represent the outcome of the event and then trade those on the Augur exchange, essentially. So you can create, for example, an asset that says, will the price of Ethereum be over $500 on the 1st of January next year? And if people think it will be, they can buy the yes asset and sell the no asset. Or if they think it won't be, they can input some liquidity, hold the no asset, and then sell the yes asset. So there's a trading price based on what people think the outcome of the event is going to be. So it's essentially using market intelligence to form a crowd-funded perspective on the probability of an event occurring based on the actual price of that asset, which is a complicated way of saying the crowd forms a consensus on how likely something is to happen.
A complicated way of saying crypto futures markets.
Yes.
And the theory here is that a futures market is an accurate predictor of price at a future point in time, effectively.
Accurate predictor of probability at a future point in time, yeah.
So, yep.
It just went to mainnet launch a couple of days ago, and it seems to be working all right. It's had $1 million of volume go through it already in a couple of days. So yeah, it's one of the projects. It's been a bit of a dark horse. They spend a lot of their time reviewing their code early on because they've actually got a really, really complicated set of incentives that are way too detailed to go into now. But essentially the entire protocol splits it in half anytime someone tries to mess with it that causes the attacker to lose all of their money. So there's a big disincentive to being a negative actor on the mechanism.
EOS governance problems. So I think we've talked about EOS a little bit.
Pretty much governance problems so far are that initially there was an EOS arbitration forum that was not very organized at all, and they blacklisted 7 accounts without doing any due process really, or there was no like community input. It was just block producers stamping it and it went through, which is not, I think, what EOS should be doing. What I think EOS should move to, in my view, is the view that's been put out by Dan Larimer, which is it's decentralized and there's no rewriting the immutability of the code except in the event where there's an error with a smart contract. So what he has stated is that his intention for EOS is to run with the intent of code is law. So you have flexibility in the interpretation of smart contracts, and they can only change the actual chain outcome when there's a bug in the code. So if there's a bug in the code, they can fix that, but it's not supposed to be for doing things like this. That's what he said.
Yeah, look, I think governance is a massive issue, and I personally think it is the most important issue to be solved in the cryptocurrency and the blockchain and decentralized computing space in general. The idea of code as law is, I think, somewhat misguided a lot of the time, because there's a reason that all the legal contracts we have are 800 pages long, right? There's hundreds of years of history of every possible edge case being explored, and yeah, code doesn't have compassion or flexibility as a general rule.
Yeah, not even flexibility. If it's designed on a smart contract, it is immutable. It can't change. It has to be updated, and then you have to move everyone over to the new consensus if you try to change it. But what it's basically allowing is for when there's a smart contract that has problems, the creators can freeze the contract and then update the rules of the contract. And it's not specifically intended to be for blacklisting accounts. And I think that's one of the reasons why Dan made it an open community launch, so that there can be competition between different chains and people will be able to choose their own arbitration jurisdiction. So it's been my view from the start of EOS that there will not be one mainnet. In that case, I was mistaken. There has been a mainnet created, and I was very surprised to see all the block producers come together like that. But I still think there's room for many, many more EOS blockchains to be made with alternate interpretations.
They're making one right now.
Yeah, very good.
The other way
Tell us.
to go with the code is law thing is make it harder to write shitty code. So this is what Cardano and there's a couple of other blockchains that are exploring this using functional programming languages to make it more difficult to write bugs. I think that's the better way to go on this, to punish the code is law.
Yeah, I agree with the sentiment of code is law. The practicalities of it are the issue. So making it harder to write bad code is something that can be improved with functional programming languages, things that make proofs of correctness, I think is that something that they facilitate? Yeah. Yeah.
I think Cardano is very well peer-reviewed. I think the issue ultimately is that all our legal contracts, of course, take place within a layered legal framework that has multiple levels of interpretation and enforcement and all those sorts of things. Yep. And I think in a lot of cases you might be able to prove on a blockchain that such and such a person actually electronically signed something. You can't prove whether they were in possession of their phone when that transaction was initialized. Right, so what happens when one of the kids has access to the phone and authorizes something that they weren't supposed to? All these sorts of edge cases where you run into the need for outside interference will still happen.
But the more you move away from that custodial system, the more you give people leeway to do the wrong things. So I know that if my kid gets my phone and signs something and that's going to result in me losing millions of dollars, well, then I'm going to be much more secure about the fact of giving my child my phone. If I know that I can reverse it in the end, then, the incentive for me to keep the keys away from the kid are much less.
It also creates a moral hazard in the sense that you can pretend to be defrauded, and that in itself becomes fraud.
I think a lot of these issues need to be solved off-chain,
Yeah.
Yes.
So I think that... Yeah, go ahead.
You go first.
Yeah, in many ways, I think the protocol itself should be immutable in the sense that it can't be changed without a massive, overwhelming consensus of the nodes. And then build the other things in applications using multi-signature contracts and things like that to build the flexibility into the applications instead of trying to wedge it into the protocol where it doesn't really fit.
Very good point. The one thing that I will add is that ultimately with great power comes great responsibility. So the ability to have your own funds and to control your own funds and be completely responsible and accountable for your own funds requires a lot of the individual. It's a lot of responsibility, and what I do not want is for this space to become and remain something that's feasible for the elites only. So, if I want my 6-year-old kid to be able to go down the street and make transactions without accidentally hitting a wrong button, and that means that, apps on top of these things become really, the interfaces become really friendly. But also there are certain cases where, people simply don't have the capacity for some of the risks that these things are exposing them to. This is why we have legislation around, credited investors and all these sorts of things. You had a question down the back?
Just on top of governance, does Decred or Tezos, do they have any other ideas, thoughts on that? Do they help?
I'm not too sure or familiar with the Tezos project, but I can speak a little bit to Decred. To the best of my knowledge, they have a community project funding pool that is allocated according to the votes of, if I recall correctly, some sort of supernode structure within that currency. So they have a little bit of community governance over where they allocate their project funding, but they don't have anything like the transaction flexibility of EOS.
So here in Melbourne, we have, or here in Australia, we have Horizon State, which is really working in that space. Some really great thinking in there. And I might do a little bit of report on it at some point, not right now. But Tezos, to my mind, is really the punchline of a very a tragic joke in terms of the fact that, they had all the best intentions of solving governance for all of blockchain kind, and before they even launched, there were multiple forks and lawsuits going back and forth between the founders, and basically a
garbage fire.
There you go. I was trying to find words that I wouldn't mind going out on a live stream. Okay.
Go ahead, Ani.
Yep.
Regarding alternative nets on EOS, how is that going to be feasible when one entity controls all the funding?
So it's not one entity that controls all of the funding. Go.
Regarding EOS alternative nets, how is that going to be feasible when one body has all the funding?
It's not really one body that has all the funding. Block 1 has an allocation of 10%, but an EOS mainnet can still be activated with 15% of the network. Block 1 didn't actually vote in the activation of the EOS mainnet. It was mainly onboard switched on users and also some exchanges. So if the EOS mainnet in its current state becomes too overburdened by whether it's arbitration forums or block producers that are going down some crazy lines, it's very possible to create a new fork of EOS with the support of the community. But I don't think it's necessary yet. I think we need to work out how to use the first one.
All right. I see the next one here is the money button and security token. Is that one of yours, is it?
Yeah. We can have someone else if you guys want to talk about something else. Who else wants to talk about?
Over a couple of weeks.
But next week there'll be more stuff to talk about. Seriously, does someone else want to talk? I put these in not expecting to be up here talking about all of them. I can talk about who wants to hear about the money button? Alright, so the money button is a project made by yours.org. So yours.org is a social media platform that uses Bitcoin Cash to allow people to upvote and tip posts on their social network. And they're coming out with a new product pretty soon called the money button. It's in development at the moment. They're going through design processes. But what it basically is a wallet that can allow people to send Bitcoin Cash directly through a button that can be embedded onto a website. So they don't need to go and create their own wallet or their own app and anything like that. All they need to do is send fiat currency of any form or Bitcoin Cash to their money button, wallet, and then they can directly send that by pressing a button to either tip hosts all over the internet or purchase things from shops where they can just embed the button and receive Bitcoin Cash straight through. So yeah, going forward from that, they've discussed the process of making a security token. So one of the first major projects that is legitimately talking about making a full-on security token.
I have a question.
Yeah.
Which Bitcoin Cash website, like news website, are you pulling all this information from?
It's not from one specific website, it's from an entire range of them.
Okay, so where's Bitcoin Cash?
That's the project I follow, yeah.
I'd actually like to
Bitcoin Core doesn't
hold
have
the
this.
crowd on the next one. Who here has got Twitter personalities
Bitcoin
they follow around crypto? So who's got some favorite crypto Twitter personalities?
Time back. Oh, yeah.
Tone Vase is a popular one. Charlie Lee.
What is yours?
John McAfee, of course. Andreas Antonopoulos would be the last one. Datadash.
Yeah.
Oh, yeah.
Yeah. Yeah, I mean, they...
Sorry? Laughing Monkey. I don't think I followed Laughing Monkey. Huh. Nuggets News is a popular one around here. Yep.
Blockchain Center.
Blockchain Center. All right. We're about to wrap up. Let's just finish with I lost my Lambo to EOS. Now I drive a Kia. Where to put life savings now? Here to answer that question. Go, John.
All right, I think that's it. All right. Everybody, thanks Anouk. All right, now we're going to go for our 90-second pitches. 4 spots. Who's got 90-second pitches? 1. Any more 90-second pitches? Talk about your product. Talk about your projects. Talk about if you want to acquire new talent. Talk about if you want to collaborate with something with a project. If you have an idea that you want to present and get a feedback and bounce off some ideas. Any research, anything that you want. There's another one over there. We've got a second one. 3, one more. Any more, any more, any more. Anything. You can tell us some exciting news about what's happening if you like. Tell us your favorite tweet. Anyway, okay, we've got three over here. Oh, we've got a 4th one. Fantastic. Okay. Maybe you should do an auction here. All right. Just before we get with the 90-second pitches, because we have a lot of people here tonight and we're going to be having pizzas later on, if you have drinks or plastic cups, please put them in the bin. There's a white lid on the bin. Please do not leave bottles around. I've seen it. I'll be watching you. Secondly, I see a lot of people standing up. There are about 8 seats over here. We will not put any more chairs until all these seats are filled up. I see another one, 2 over there, 3rd. So please take your seats down. We will not put any more seats. All right, 90 seconds. Yeah, let's go over this side.
Oh,
he's
two projects that I kind of found out about in the last couple of weeks. I'm not a part of these projects. I just thought that they were interesting. So there's one called KillCord. The idea is that you upload a payload to IPFS and you encrypt it, and then using the Ethereum blockchain, you have to poll in to a server. If that server doesn't receive your response, it publishes the decryption key on Ethereum. I think that's the idea, or generally the idea. The idea is if you have a bunch of documents and you're being targeted by some person, you can have this system so that if you ever get kidnapped or killed, it automatically publishes all of those documents out to the whole entire world and in a decentralized way that no one can stop. So that's KillCord. The other one is Coda. So they're using ZK snarks, which are a kind of new type of cryptography to compress blockchain proof of work
into like a very small amount of information. So they're saying that they can compress the whole Bitcoin blockchain proof of work in a way that is verifiable by everyone into about 80 kilobytes of space. So that would mean that I could download or I could verify the whole Bitcoin blockchain with only 80 kilobytes. And it's a bit different from SPV as well. You don't have to download the block headers. You can just get this zero knowledge proof of the whole blockchain data. So yeah, that one's called CODA, C-O-D-A. Yeah, CODA, and the other one's Killcord. So yeah, those are my two projects that I thought were really cool.
Sweet. There's a meetup with CODA that's happening.
It might be a different one.
Thanks.
Thank you. Ooh, jeez. All right, Harrison over there. I know you've had airtime, but that's why I'm giving you 90 seconds.
I don't need it. Hey guys, so my name's Harrison. If you guys are new here, I'll tell you a little bit about the project that I've been working on over the past couple of months. So I've been building a distributed social media and business platform called Ezero. You can learn about it at ezero.io. So it aims to enable everyone to share information and value freely by combining blockchain social media with a decentralized exchange and a peer-to-peer marketplace. And it incorporates IPFS storage, so all of the storage is held in a decentralized and distributed way, so it can't be taken down by any sort of actors against the system. If you want to learn a bit more about that, you can either talk to me later or head to ezero.io. And the last little thing, if anyone wants to try out the hand cash wallet, I'll send you a little bit of Bitcoin Cash to show you how it works. Thanks.
Woo. I might try that out. All right, next up we have Troy up there.
Hi everyone, my name's Troy Kasser. So I'm one of the co-founders for MEDX. So we're actually launching a metals token exchange in first week of September. We've just had our licenses approved to set up the first cooperative that will be able to do this using crypto. So we'll be the first cooperative basically that's able to market a product with cryptocurrency, metals tokens, etc., which is quite an achievement. And as such, we're setting up the cooperative to act like a DAO, a distributed autonomous organization, and we're pulling a team together to be part of that. So there'll be several separate projects as part of the overall project of launching the token exchange. So we're putting a whole ecosystem together, including education on not only trading metals, but also trading cryptocurrencies, and why the importance of trading tokenized metals can help you build a better wealth portfolio, including leverage your ability to do better with cryptocurrencies. So I'm looking for people who are interested in getting involved in the project. We will have paid positions as well coming on board, and other opportunities.
Thank you. Last one.
Oh, hi everyone.
Kim.
Hello. I'm working on an ad tech platform. It's only quick. An ad tech platform that rewards for their attention. So we're looking at the moment for help. Anyone that has experience in the startup space with blockchain, tokenization, and we're looking for advisors. So yeah, come and talk to me after if you want to know more about it. Thanks.
Thank you. All right, thank you everybody, and thank you for patience. We've got the main event coming up now. Tonight's sponsor, who, as I said, bringing the pizzas, providing the beer later on, but I would like to ask the two founders just to give them a clap up on stage as they will be talking. So tonight's sponsor, Castlecoin. We're getting there. Thank you for your patience. Those people still standing up, I see 4, 5, 6 seats over here still. 2 over there, 2 at the back over there. Don't be shy, make a new friend.
Does anybody need their teeth fixed? We've got a very good doctor here, Dr. Joy Polsbury.
Excellent, you should have been in a 90-second pitch. All right, one more round of applause for Castle Coin.
No, that's right. Evening, everybody. My name's James Lynch. I'm the CEO of CastleCoin. It's a project we've been working on for some time now. Often, there's, I suppose, many challenges, with respect to the application of blockchain technology, how we might use it. I'm going to get onto that one. Perfect. How we might use it, and certainly when it comes to use cases, real estate's one of the first that comes to mind. There's a great deal of opportunity in the real estate sector, and however, there's a great deal of complications. And what we'll do tonight is cover some of those complications, cover some of the opportunities, and means and methods by which we intend to overcome them, employing the use of blockchain technology. Oh, okay, will do. So CastleCoin's a blockchain-based Australian real estate investment platform designed for the buying, selling, listing, transfer and tokenisation of both whole and fractionalised real estate assets. Not only will it serve to tokenise assets and improve document flow and transactions and liquidity, but also create an informed ecosystem to ultimately improve market efficiency and the link between both buyers and sellers. So there's a great deal of opportunity. Investment demand for real estate globally continues to outstrip supply. IBIS World forecasts, particularly here in the Australian real estate market, that it will grow at just less than 1%, the index price, certainly between now and 2022, 2023. And one of the key drivers for this is Australia's estimated population is expected to be between 36 and 48.3 million people by 2061. And the reason I bring up these Australian real estate statistics up is that real estate here in Australia is considered worldwide to be a very viable investment opportunity. Okay. So locally, with respect to our local market, taxation statistics from 2016 show that there's over 2 million property investors here in Australia. Of those, 65 live in their own home and 35 are residential investors with multiple properties. To further emphasise the value of the market in 2017, the total value of finance linked to residential investors was in excess of $13 billion. And Australia's housing market as a total was valued at $6.9 trillion at the end of 2017. So just looking at those numbers, there's a huge amount of opportunity there. There's a huge amount of activity, and in turn provides an avenue for us to implement solutions, in this case a blockchain one, to improve access and liquidity within this market. Internationally, Foreign Investment Review Board figures show that foreign real estate approvals were in excess of $66 billion for the year of 2016 and 17. So there's a huge amount of foreign interest, particularly with Australian real estate. And what we intend to do is make that available not just to local investors, but international investors as well. Foreign investors are focusing on direct asset ownership and investments that offer yield rather than growth, which makes real estate, again, another ideal opportunity for them, particularly when you take into things into account such as rental yield. In addition, they do have the bonus of capital growth. Further to that, Australia is ranked in the top 5 most stable international real estate markets and is projected to continue this growth which we've talked about, supported by political, social, economic and national security. So fractionalised real estate opportunity. And the fractionalisation and the breaking down of real estate is something that's really beginning to happen, particularly here in Australia in the last couple of years, and will continue to grow over the next few. The average Australian mortgage, for example, is in excess of $500,000, which makes access to this real estate market in conventional means particularly difficult for new money and generations coming through. In the past 2 years, fractionalised property investment platforms have emerged in Australia. In this time, they've signed up over 9,500 investors across 62 properties worth more than 40 million Australian dollars. Now, this number has actually increased since then. And within 5 to 10 years, the CPA estimates that fractionalised property investment could represent 10 to 20% of real estate investment here in Australia. going back to that billion-dollar number. So huge opportunity, not just in conventional, but in fractionalised real estate opportunity as well. So in recognising these opportunities, Castlecoin, employing the use of blockchain technology, intends to address this market. There are, however, a number of challenges when it comes to real estate investment. Capital requirements, liquidity, viable asset selection, market trust and document management. And capital requirements, of course, is the first one. The amount of money that it takes to get involved in the real estate market is quite excessive, and the means by which we're saving up enough money by way of a deposit to access that market can be a challenge. Not just because of the amount of money you need, but the rate by which the market is moving. So a report came out last week, showing that it takes around about 5 years to save up for a deposit for a basic apartment in Brisbane. Now that deposit, say $50,000 or $100,000 today, isn't worth $100,000 in 5 years' time. And there's a couple of main reasons for that. First is CPI, second is inflation, and the third one is market activity, because the market is moving at such a fast rate, particularly with respect to real estate. So by the time you've saved up that $100,000, it won't necessarily be worth $100,000 in 5 years' time. So what we aim to do is provide an opportunity for people to peg those savings to the market to which they intend on investing in. And they can do that through fractionalisation, and I'll show that how that works and how we can manage that using blockchain technology. Another main challenge is liquidity, and that's the ease and means by which we can actually move real estate assets around the market, whether it be whole or fractionalised. And there's a number of reasons for that. Document management, as I've put down there at the bottom, is one. The number of parties involved. Thirdly, viable asset selection. So identifying real estate assets which make good investments can be a difficult choice. Identifying your principal place of residence or somewhere that you'd like to live, with your golden retriever and white picket fence is absolutely fine. But when you're looking at real estate with respect to an investment class, there's certain things that you might be looking at. And each investment is different considering each different type of investor. Some might be seeking capital growth, some might be seeking negative gearing strategies, some might be seeking yield. It really just depends on what it is that you want to do. Particularly from an international audience as well, and that's who we intend to address as well as the local. Having that local knowledge with respect to the Australian real estate market can make a big difference. Market trust. So can you trust the vendor? Can you trust the builder? Can you trust the purchaser? We'll address that also. And then, of course, document management. And anybody here who's been involved in the purchase, acquisition, sale, transfer of real estate knows the amount of documentation, conveyancing, so on and so forth that's actually attached to that. Next slide. So solutions. So we intend to overcome these existing challenges by providing a real estate platform, an ecosystem that uses blockchain technology and reputation systems to incentivise groups of individuals to bring not just their intellectual capital, but also their financial capital together as well. They'll be able to pool financial resources to get real estate access, assess the best real estate investment ideas, leverage reputable experts, allow users to buy fractions rather than whole assets, improving their access to the market as a whole, and establish trust and security whilst automating processes. So the platform functions. So in order to achieve all of these goals which we intend on doing, we've got a number of key platform functions to do this. Next slide. First, our primary platform function is real estate investment. So it provides a platform for you to buy, sell, identify assets that you're particularly interested in. We'll be able to do this in both fiat and cryptocurrency. So if you're a vendor who's selling a house and you'd like to accept Bitcoin, we'll make that available too. If you prefer to accept fiat currency by way of AUD, we'll make that available for you as well, or a combination of them all. And particularly this presents another huge amount of opportunity with the amount of wealth that's being created, particularly in the cryptocurrency market over the last couple of years. We find that a number of these people who have found this wealth are looking for means and methods by which to move them into real world assets, such as real estate. And Castlecoin will serve as a perfect platform to make this happen. Next slide. Search and listing. So going back to viable asset selection. So comprehensive search and matching functions for a range of real estate investments is made available to users. Not only are we talking about the number of bedrooms, bathrooms, car spaces, locations and price, but we're also using data search and matching functionality to identify other assets in the area to link in rental yield, capital growth potential, amenities, council plans, so on and so forth. So that means you can actually make an informed decision with respect to an investment. Just as with any publicly listed company that we decide to invest in with conventional means on the share market or whatever it may be, we would look at their profit and loss statement. We'd look at the market by which they operate in, all those surrounding factors. And we aim to address that, particularly with the real estate. So users can in fact make an informed decision. To support this information process, we have asset review, which comes from the user base itself. So not only relying on data from government bodies, councils, credit reporting facilities, the vendor, marketing agencies, but users themselves will also be able to provide feedback on the listings that are actually on the Castlecoin platform. So they'll be able to vote yes, no, neutral, and provide qualitative feedback and be rewarded for doing so. Next slide. So asset review rewards. So each listing on the Castlecoin platform attracts a fee based on the percentage of the asset's value. Now that initial fee is actually distributed amongst anybody and everybody within the ecosystem who decides to vote and provide feedback on that asset itself. But with respect to user feedback, I'm sure people here have used TradingView and things like that. You know, you kind of have novice and pros and so on and so forth. The rewards pool, which is put together for encouraging people to vote on listings and provide feedback, is distributed based on users' reputation score at the time. So identity management and trust and reputation. So identity verification is a big part of the process. Again, this stops us from people making multiple accounts, so they'll be required to go through KYC and AML processes in order to set up a user account. But in addition to that, to support users' reputation score and maintain transparency of interactions, users will have a platform username and an alias, a reputation score, a date they became a user, and a summary of their contributions towards the ecosystem. Now, their reputation score isn't just influenced by their activity on the platform by way of transactions and transfer of real estate assets, but a number of additional functionalities that we've included to create an informed ecosystem of real estate investors. Those features include an education and data hub. We're proud to be working with Australia's largest privately owned financial services training company, Mentor Education, and able to provide short courses and information in financial planning, real estate, mortgage broking, and surrounding issues. And users who get involved in that will be able to improve their reputation score, and in turn showing that they're actively involved in improving their knowledge, and therefore their feedback with respect to potential investment opportunities should be weighted a little bit higher, again reflected in their reputation score. An engaged community. So it's not just about education, but it's also about sharing that information and then bringing people on board as well. So people will be able to openly discuss things such as market conditions, real estate, potential financial and real estate investment opportunities. And so with their activity in the Education Hub, their activity within the community and discussion board, and also their activity with respect to transactions will all lead to users having a higher reputation score, which is important when it comes to claiming your share of bounties, and in turn rewarding users for becoming part of an engaged real estate investment community. The Castlecoin ecosystem will be supporting two primary units of currency. The first being utility tokens, described as Castlecoins, and the second being Castle tokens. Now, Castle tokens are uniquely generated by the platform to represent real-world assets, both whole and fractionalised. Take it a little bit simpler. Castle coins, or CSC as they're now registered on the blockchain, are a utility token designed to access platform membership, list properties, generate and execute smart contracts, and facilitate the tokenisation of property and property deals. The role of the token, as I mentioned, is to represent real-world assets. A total supply of 100 million Castle coins will be released, and they'll be available on Australian Crypto Exchange. The utility of the coins is designed to allow platform membership, listing of properties, and also pay for the tokenisation and transfer of assets, agency sale and marketing fees, tokenisation and transfer of fractionalised assets, and token exchange transfers. And the value of the coins is directly correlated to the utility on the platform. So again, it's a utility coin designed to act as the fuel to run the ecosystem that will support the transactions, tokenisation and transfer of real-world real estate assets. Castle tokens are a non-fungible token, which means they're unique, and they represent a unique piece of real estate here in Australia. They'll be regulated by each state's laws and all the regulatory and taxation requirements that go with them. Castle token fragments will also be available, and I'll explain how they work in just a few moments' time. At the bottom, however, I've just got a bit of a diagram identifying the sort of information that we can actually link in with one particular token to address some of the document management and information sharing challenges that we come up against. So certainly in any real estate transaction, certainly in a conventional sense, we're looking at things such as identity verification, contract of sale, Section 32 vendor statement, Section 149, council statements, drainage diagrams, titles, deposit strata plans. What else? We've got pest and building inspections and, of course, valuation report. So what we can actually do is link all this information in with a metadata reference to our ERC 721 tokens. And when it comes to sharing that information, it's particularly important. So you might need to share that with your bank, your conveyancer, your lawyer, so on and so forth. So they can actually find all that information in one single and easy to access place. Fractionalised real estate investment is an option open to platform users, okay, which allows you to purchase a fraction rather than a whole property. The reasons you might do that, as I discussed earlier, is to perhaps peg your savings plan to the market that your deposit intends on going towards. Or you might decide that you're a sophisticated investor and you'd like to avoid specific risk by diversifying your portfolio across a number of different assets within a single market. So you might decide to buy a portion of a house in Brisbane, a portion of an apartment in Sydney, and a portion of a house in Melbourne, or whatever it may be. Now, you're still exposing yourself to market risk, but what you can do is avoid specific risk by addressing just one single asset, or having all your money tied up in one single asset, which is a real benefit. Following that, users will be able to actually see their shares or their holdings in any fractionalised asset in live time, with valuations coming through from independent valuers and also the market and user feedback that we have. Asset token opportunities. So users have a couple of ways by which to get involved in a fractionalised real estate investment. Well, we'll be operating a secondary market. So if you did have a fraction, you actually be able to float that fraction of that property on a secondary market, and it operates in a very similar bid and ask functionality like any exchange. The other way, if you'd like to get involved into a new one, would be an asset token opportunity. So what we would do is we would identify through user consensus and also the executive panel on the Castle Coin team a property that's viable for fractionalisation. And it would have to meet a number of needs, being cash flow positive, have a certain rental yield, have a certain price. We then float that and advise all users on the platform of an asset token opportunity by which they would submit an expression of interest. Once we've received enough expressions of interest, we can then move from the opportunity to the settlement phase. Now, at this point, users are then required to actually send their funds, the amount that they said in their expression of interest, into the pool. Castle Coin then takes that pool of money, acquires the asset, and then we submit it to a fund, break it up, and create a pool of tokens representing that asset. However, if a user submits an expression of interest and fails to go through with their financial obligations by which of submitting money, they're not financially penalised, but it may in fact affect their user reputation rating. So this means that it just serves as a disincentive for people sort of actively saying, yes, I'd like to get involved, but in actual fact, it's not a well thought through idea. So how does it work? Well, first we get a pool of users who submit their funds and then we acquire an asset. Once we've acquired the asset, we submit it to a unique fund operating in a managed investment scheme who we've partnered with. Now the fund, we create an ERC 721 token which stores all the information about the asset and the fund itself. The fund's then broken into units representing $1 of what that asset was acquired for at the time. So if we purchase a house for, say, $500,000, we would create 500,000 units. And then we create 500,000 ERC20 tokens, which are actually directly linked to that ERC 721, and then assign that back to the users. Now, the users who hold those tokens will be entitled to their respective share of capital growth if and when they decide to sell it, and rental yield as it's realised at the end of each month. The tokenised asset exchange, again, to improve the liquidity and address that particular challenge, we'll have a tokenised asset exchange available. And as they become tokenised after legal settlement, okay, users will be able to identify using maps and other means tokens that are available for sale. Particularly important to improve the efficiency in the market as well. Like if you're a little bit savvy, you might jump on, say, a council website, identify that they've got some plans, some schools, some hospitals, whatever it may be coming through. Then you might jump onto the map, look for asset tokens in that particular area, knowing that perhaps in 3 to 6 months' time when the building approvals or whatever it may be come through, picking up those tokens in expectation of future capital growth. In addition to fractionalised investment, we offer conventional investment as well. So via the platform, users can identify an investment opportunity to meet their requirements, as we've talked about a little bit earlier on. And each sale we process through traditional conveyancing and legal requirements pursuant to the real estate respective state. But in addition to that, we'll be managing smart contracts and then document management, which will be stored on both a private and public blockchain layer. A transaction portal is made available between both the vendor and buyer to facilitate the transfer of assets. The portal will support Castle Coin, cryptocurrency, fiat currency or a combination. And providing a single data submission point for both the vendor and the buyer, the chance of human costly delays, lost documents, communication is all removed. In turn, minimising closing costs and speeding up the transaction and transfer time, which can make a big difference, particularly if you're financing. If you don't accept, if you finance, say $400,000, and then you're waiting for that property to close, another 30 or 60 days or whatever it may be. So you're getting access to that market a lot faster. Further to that, vendors can also close their deals, create their builds a little bit faster, improving, again, the efficiency and lowering the overheads. The transaction portal facilitates a lot of this, and what we just saw was the overlay of that. So data and documentation forming part of each transaction is encrypted and sent via a peer-to-peer distribution protocol. Encrypted data and documentation will only be viewable by the vendors, purchasers, legal representatives and conveyancing services, and will manage that privacy. Over here we have a diagram where we have a contract of sale, the tokenisation of an asset, and you may in fact decide then to share that particular token and the subsequent information with your bank in order to organise financing if they want to make sure that the asset's going to value up, to make sure prior to obviously them handing over the money. Or secondly, your financial planner, your accountant, your solicitor, so on and so forth. So when it comes to them managing your legal side, doing your taxation at the end of the year, so on and so forth, all of that documentation and information with respect to the transaction and the asset and the contract and so on and so forth is in a single place. That's easy to share and be able to set timeframes on how long those individuals or professionals would have access to that information. I'm going to invite Johnson Zhu up. He's our blockchain application manager to talk a little bit more about the blockchain application and the platform security and how it intends on working.
Thanks, James. So a lot of you might be confusing in terms of what is ERC20 and what is ERC721 tokens. So Castlecoin essentially utilize blockchain solution, which is called Ethereum. And then based on that, we implement a private cloud layer to ensure security for its users. So Castlecoin will build on the Ethereum main network through ERC20 and ERC721, which is non-fungible standard smart contract. So the Ethereum smart contract provides an interface where the token can be exchanged publicly through third-party exchanges. So due to the volume of frequency of transactions in addition to the size of document files, a private cloud solution has been proposed to better manage and store the private data relating to public property contracts, inspection report, KYC data, and other documentations. So Castlecoin will facilitate and record transactions between users by employing blockchain and smart contract technology. So essentially, Ethereum-powered smart contract will support transactions, removing the need for a third-party agencies in real estate transactions to save time and money on processing and transfer costs. Not only does the code of smart contract have the ability to govern and so not only does the code of a smart contract have the ability to govern and execute the term of contract, it creates then commitment of digital tamper-proof and a reliable representation of real estate and its respective transactional information to the blockchain. So, in terms of security, in the blockchain space, we care about security. So what sort of security measure are we actually using? Castlecoin platform, in the initial stage of a platform, so we measure to ensure the security and validity of transfer, including the employment of internal compliance team and external audit team to solve the vulnerability and penetration testing with a view to employ the security management certificate standards. We also utilize Cloudflare for the DDoS protection and web application firewall services. The platform will also employ the use of a code and a hot wallet with over 95% of users' digital assets to store offline to protect the users' funds, and also our Castlecoin platform to ensure a secure environment to assure the properly secured assets on the CastleCoin platform. So I will pass on to James to finishing up the rest of it. Thank you.
Thanks, Justin. So, who benefits from a platform such as this? Well, investors, obviously the first one, which we've talked a lot about. So obviously local and international investors benefit by having access to the Australian real estate market, which is reviewed by an active user base. Small investors are able to access the market that they otherwise wouldn't have been able to. Larger investors can diversify across the market. And they're also provided with the peace of mind provided by the secure transfer, allocation and storage of contract terms. Vendors benefit by knowing they're exposing their assets to an engaged real estate investment community. Further to that, they have an opportunity by which to improve their reputation and access to an automated sales, closing and tokenisation process, which should shorten the closing and transfer times, and giving them access to funding sooner to continue on with their developments. Professional service providers will benefit by being able to engage with the local and international investment community. A function that we'll have available is an opportunity for financial planners, mortgage brokers, accountants, professionals in the financial service industry who support the real estate investment function to list their services, and again they'll be subject to an asset to a user review. And then government and regulatory. So the implementation of timestamps and immutable records makes auditing transactions of real estate a lot easier. And we'll also be aiming to link in with the electronic lodgement network here in Australia, which there's actually by July 2019, both Victoria and New South Wales will be moved to automated digital land titles, and the rest of the country is not too far behind. At the moment, PEX is the only one. However, there's an expectation that a number of other electronic lodgement network operators will also be available. In addition to that, the digital transfer functions of the platform align with the objective of creating efficiency and convenience around the property transactions. And this was one of the 27 target areas of regulatory reform, which was put in place by the government with the Electronic Conveyancing National Law. So our go-to-market strategy with this is, obviously I didn't have a beard back then, but I actually work on a community TV program here in Melbourne called Dollars with Sense. We do all sorts of things which are financial, investment, legal, property related. It's been on air for 6 to 7 years now. It's on a community TV both here in Melbourne. In addition to that, we'll be using conventional and digital strategies supported by television program, as I mentioned. We'll also be maintaining presence at both local and international real estate expos and seminars. And if you'd like to come down this weekend from Friday through to Sunday, we'll be at the Melbourne Property Buyers Expo. You can use the term blockchain when buying your tickets, and you can actually get a free pass if they're still available. Further to that, we'll also be going international, targeting to the US, UK, Belgium, Hong Kong, Vietnamese, Singapore and Chinese buyers. In addition to conventional real estate, we'll also target audiences, particularly the fractionalised, and this is a bit of a market breakdown. First home buyers under 40 who do not wish to forego their first homeowners grant or are in the position of saving up for a deposit. Initial investors who are looking for access to the real estate market. And sophisticated investors who want to minimise risk through diversifying their holdings through a number of assets within the real estate market. So we're currently going through seed and cornerstone funding at the moment, and we'll be moving to public pre-sale in September this year. 75% of the coins will be made available through the ICO. 15% are reserved for the advisory panel, and 10% are held by the platform for post-ICO sales, marketing and team performance incentives. There'll be 100 million coins, currency accepting Ethereum. Exchange rate is 1 Ethereum equals 2,000 coins, and a discount schedule is applied for those who are getting in through the ICO. No limitation on personal token allocation, with a soft cap of 10,000 Ethereum and a hard cap of 16,000. As you can see over there, we have a discount. So for pre-sale, 60% discount on the regular retail price of 1 Ethereum equals 2,000 coins, then staggered down between 40, 30, 20 and 10, with 40 million coins of the 100 million made available through the public and pre-sale. Of the funds raised, 35% is going towards platform development, 35% is going towards compliance, licensing, regulation and operations, and 30% is going towards marketing and market penetration initiatives. With our roadmap, so we've just got to the end of stage 1 where our white paper has been developed. A legal structure has been signed off, and I'm pleased to say that we've got heads of agreement in place with a leading financial services organisation who can facilitate the fractionalisation of real estate for us, and a nationwide property investment company giving us access to real estate licences in each and every state of the country. Stage 2, and this will become during the token public sale. We'll be announcing further partnerships. The platform back-end development will start. Digital land exchange and market data platform will also be developed, aiming for pre-alpha release, platform front-end, PC and wallet development. So people can actually come to see their Castle coins sooner rather than later. And we're aiming to have that done by around about March, April next year. Stage 3, the platform alpha release. Whole and fractionalised real estate services will be available by that stage. Then we've also got the beta release of the platform and then the real estate token exchange development. So start working on that secondary market to improve the liquidity and transfer of those tokenised assets. Stage 4, the formal release of the platform with all features available, collecting feedback for additional features and expansions, and then aiming to improve the scalability. A little bit about myself and the team. I've worked within financial services, compliance, training and online education for around about 5 to 6 years before taking on this project. Supporting me, we have Jackie High, who's our Chief Technology Officer, and Johnson Zhu, who we met earlier, and our Blockchain Application Manager. Amongst our advisory boards, we have Alan Guo, who's the founder, works with Blockchain Global. We have Mario Bertoni, 30 plus years experience in real estate, in both the education and the operation of a real estate agency and also a property developer. Dr. Stephen Endicott is our taxation specialist. He did his doctorate of self-managed derivatives within a self-managed superannuation fund environment. We have Professor Sinclair Davison, who heads the Blockchain Innovation Hub at RMIT and also Professor of Economics over there. Dr. Mark Sinclair is our Financial Services Technology and Compliance Advisor, and Andrew Wozniacki, who's our Blockchain Technology Advisor, who's also been working with a number of ICOs in a business development capacity. In addition to that, we have Dallas Brooks, who I'm sure you've seen around tonight with the orange pants. He's one of the founders. Karen Cohen, who's the special thanks to Karen for assisting us in putting tonight on, and she's our Blockchain Community Advisor, just come on board. And Alex Turkovic is our Real Estate Information Technology Lead, who's had a number of years' experience in the PropTech space and developing platforms up until now. Strategic partners include Blockchain Global, CIA Tax, Dollars with Cents, Mab5 Property Network, Mentor Education, Australian Crypto Exchange and MNC Marketing. For more information, there's all of our links up there. And yeah, look, if you've got any questions, looking forward to chatting to you afterwards. 10,000 and 16,000. Ethereum, yeah. Oh, sorry, mate. Yeah. Well, a couple of days ago it was about 10, so yeah, it's probably changed a little bit. Yeah. Yeah, 10,000 Ethereum. Over there.
Can I ask, who holds the title when you go distributed?
The sub-fund, where the asset lives, holds the title. And then I've got it. So the question was, when the property is fractionalised, who holds the title? So the title is actually held by the trust or the sub-fund, which operates within the managed investment scheme. And then the units of that actual fund are then assigned to the people who have invested in it. For each and every property. So each and every property, we actually create an individual sub-fund, which will have an SPDS and whatever it may be attached to it. So yeah, each different asset has its own sub-fund and its own unique set of tokens. So a little bit different to a traditional AREIT or whatever it may be, where they're all pooled in the same one. These ones are actually all separate.
The benefit of that would be then I can exchange my token with someone else and not pay stamp duty when you transact.
That's right. So look, there's certainly still.
Sorry, James. Can you just repeat the question for the people that can't hear from the side?
So the question was around stamp duty. There's still taxation implications of trading units of a managed investment scheme that you're best sort of speaking with your accountant for. But yeah, the asset title still remains with the fund. Jaril, you can have one.
Thank you for the presentation. I have two questions actually. So you know that 75% of the token will be released to the ICO and pre-ICO. So my question is, what is your strategy if you have some to stabilize the price of the token since the 75% of them is going out in the first time, in the first place, is it? So how do you do that? That's the first question. And the second one is, I understand that this project can be a very beneficial one for the overseas investors when they want to put in their money to Australian property market, especially on the stamp duty side, do it lawful, right? But how about for domestic investors? What would be Castle Coin's advantage compared to the investors putting real Australian dollars into the property market? And, what are the advantages for them to consider using this technology instead of real dollar? Yeah, that would be my two questions. Yeah.
Thanks for your question, Joe Real. So the first question, certainly with coins that are made available through the ICO, we have a number of escrow stages attached to seed, cornerstone and pre-ICO sales, obviously managing the availability of the coins out there. The second question, the benefit for Australian investors is that they're able to see their real estate assets in real time with all the document management in place. They also have a marketplace that they can tap into where they can see a whole range of real estate investments. Rather than having to visit, say, 10, 15 different agents, what we'll do is encourage all developers to come on and list their properties on the platform. And then the automation and the simplicity attached to the conveyancing and underwriting transfer processes will be of great benefit.
I've got two questions. The first of which, when a group of people come together to crowdfund the purchase of a house together, will the purchasers of the house have access to a loan to purchase a separate part that is unfunded by the crowd sale, so they can they borrow money together as a group? That's the first question.
So look, there is functionality in place for finance to be attached to fractionalised investment. At this stage, however, we'll be running it purely positively geared with 100% ownership of crowd.
Second question would be, do you intend to have any buy and burn mechanisms on the token or any system to reduce the supply of the token or deliver a return back to the token beyond its utility value?
No, it's a 100% utility coin and there's no buy or burn functionality. So there'll be 100 million in circulation and finite supply. And the demand for the token on the platform will be driven by the number of transactions, the number of listings, the number of transfers and tokenisations of assets that happen throughout.
Okay. Last question would be, is there a lock-up schedule on the team's holdings of Castle Coin tokens? And what are the terms of those lock-ups in terms of a ramping schedule to allow liquidity to those for the founders?
So yeah, look, for any of the founders or advisory board, there's a 12-month escrow in place, and then there's a staggered escrow for those involved in seed and cornerstone.
In terms of foreign investors, will this help them get around any limitations that might otherwise exist on foreign investors investing in certain property levels?
Yeah, so I suppose the benefit here is that essentially investors are, for foreign anyway, are buying units of a managed investment scheme rather than actually the title of the property outright. Now, depending on which country they're from and depending on what the information sharing is between us and that particular country, there's different taxation rates as well. So we're in information sharing agreement, say with Japan, for example, where there's a taxation of 15%. But some countries where we don't have information sharing with, there's a taxation implication of around about 30%. Well, this is basically, look, once it's fractionalised, it basically becomes a financial services product. So again, it's kind of a unit of an MIS or a managed fund, okay, rather than an asset outright. And the title still belongs to the managed fund, which is actually Australian-based.
All right, I think we got a question over here.
Who's managing the asset and the distribution of revenues? Is it just purely a capital gain on the token, or is it?
Oh no, so rental yield. So any yield that's realised by the asset is distributed to token holders who share in that particular.
So who's managing that particular asset in that case?
Oh, so the financial services. Oh, so Castle Coin will provide the management, and then we have a financial services provider who actually, I suppose, manages the fund where the asset lives.
And there's a commission that's paid to the person that puts the asset on the market, and as well as there a management fee for the person managing it.
Yeah, so there's a fund management fee, which is basically taken out of the rental yield each and every month, and then there's management fees, and obviously so it's a net rental yield is paid to users.
And just as can a person? Okay, my last question. A person, can they own a home and put it onto the market and only sell a proportion of that home through this mechanism? If
No, look, well, they could maintain ownership rights, but the title of the property would still have to belong to the sub-fund, which where the fractionalisation occurs. So you couldn't actually do it under your own right. I mean, look, theoretically outside, you might be able to, through conventional means, by syndicating your house or whatever it may be, but through this platform and the arrangements that we've got, the title would actually belong to the fund where the house is, or the asset is held. So.
You mentioned encouraging developers to list on the site, but I presume you're going to list existing properties as well as.
Oh, sure. New and established, absolutely. Ideally, though, what we want them to be is identified as good, positive investment opportunities. So as I sort of alluded to, not necessarily the golden retriever and white picket fence, but the sort of things that are going to provide either capital growth or rental yield or whatever it may be that investors are looking for with respect to real estate.
All right, I think we have one last question over here at the back.
Thanks for that. I think it's a great idea, but obviously with these things you often wonder if there's anyone else, there's competition, if there's anyone else that's already doing it.
Sure.
So one thing I came across a while back was that IHT real estate, iHouse, it's on CoinMarketCap.
Okay.
Is that something that you've not considered then?
Look.
There's a CoinMarketCap is number 203.
Yeah. There's actually a vast number of them out there, and there's even fractionalisation services available here in Australia. BrickX up in Sydney, which I'm sure you've all seen on the news and whatever it may be. Further to that, though, there's really none in Australia which are using blockchain technology and have access to real estate licences in each state, plus linkages or MOUs in place with financial services providers for either fractionalisation. And also some of the unitised blockchain representations of assets, quite often they're just reflective of a traditional real estate investment trust, whereby you have, I suppose, exposure to a whole range of assets within one particular fund, rather than exposure to individual assets within a whole group of sub-funds.
So just to jump into the IHT token. So IHT is actually currently using a different mechanism compared to Castlecoin. So it's actually a bit of, I guess, they're targeting at the same industry, but different aspects. So yes, they do, but in a different way, not in a terms of a trusted way in Castlecoin, but in a different way.
All right, I think we're going to have to wrap it up there. Everybody, thank you, CastleCoin.
No, I didn't. You can if you want, but I don't think we're at that stage yet.
All right, if anybody wants some fun, has anybody heard of a racing car called the Cobra? Yeah, well, there's one at the back there that is branded CastleCoin. So if you do want to go see it, please have a look. It looks amazing. I don't know if you can ride it, but ask Dallas or James and go for a spin. I think City Road is quite quiet now, but I don't think they'll let you. But everybody, thank you so much for coming. We are going to have now more drinks. I'll bring out more drinks. Pizza's coming soon. Two things. If you have an empty glass or a cup, as I said before, yellow bins, please, in there, recycle, help out the environment, and me, and everybody at the Blockchain Centre. If you are one of the foldable chairs, it'd be great if you can help us and assist us and put the foldable chairs back there by the wall. But for now, thanks, CastleCoin. Thank you all for coming. See you next week. May the blockchain be with you. Good night.